Welcome, everyone. Another episode of Financial 15. Kevin and I are ready to go talking about CPP again. We talked about it a couple of times. Today, we're looking at kind of one half of the equation, reasons to take your CPP at 60. We're going through a couple. You want to stick around?
Yes, more on your retirement and things that need to be done. Again, if you want to look for our videos, please subscribe to our YouTube channel. It's easy, it's quick. All you have to do, click on the buttons. We're good for that. We would love to see you have more people on there. If you want more of the information that we're providing, also go to our website at beckerorr.com, or please like us on Facebook. Any of those avenues will get you all the material that you need. But today, as Clint mentioned, we are tackling CPP and why would you want to take it at 60 as opposed to 65? There are a variety of reasons that can come up with this. So, Clint, start us off. What is CPP that we want to deal with and why we want to take it at 60?
Yeah, we need to color our discussion a little bit here. So we'll go through a couple of basics. I should mention we've done a deep dive on when to take CPP and a few of the factors. So we'll certainly link to that video. Today, we're going to cover the basics and then look just on one side of the equation, reasons you might want to take it early. But for the basics, what is CPP? It is a monthly indexed retirement pension, and you get that pension for life. And It's not free. You have to pay into it. We all contribute to CPP. If you work and earn income in Canada, you're going to be contributing to that CPP pot. Your employer will also contribute. If you're self-employed, unfortunately, you have to do both halves of the equation there, both your portion and the employer portion. And you can see the numbers on the screen there for 2021, 5.45% of your income, self-employed 10.9%. And what you get out of the pension depends on what you put into the pension, what you pay into the pension. Walk us through a few more of those basics, Kevin.
Yeah, and again, as we mentioned, CPP is normally decided to be taken at 65. There is options to take it earlier, or there is options to take it later. But today we're going to deal with some of the basics to take it at 60. The maximum pension, again, in 2021 at 65 for all your contributions would be $1,203.75. But as we know, not everybody gets that. And the average monthly amount tends to be around half that at about $614. So again, those are important numbers to know as to what's going on and what you're going to collect as you start to take your CPP. Again, collecting and passing away, there is a spousal benefit. And if the spouse is over 65, you get 60%, under 65. It's all worked out on a formula. Same sort of scenario with children under the age of 18, under the age of 25, sort of flat benefit scenarios. And one thing that CPP does provide that we always want to make mention of is there is a death benefit. $2,500 is what it is. Not changeable. That's what we've got, and that's what you get going forward. So those are some of the CPP basics, right?
Yeah, covering the basics. I know we're doing this quickly, but we really want to get into the reasons to take it at 60. And this slide is going to be key for our purposes. If you take CPP early, you don't have to take it at 65. You can take it at 64, 63, all the way down to 60. But there is a penalty for doing so. Every month before your 65th birthday, they're taking 0.6% away from your pension. So if you take it at 60, you're taking a 36% haircut on that pension amount. If you delay it, say you take it at 66, 67, you can delay it all the way until 70. You get a bonus 0.7% per month, a 42% bonus. You wait all the way until 70. Those are key factors there. And there's a big pot of money. CPP Investment Board invest all these contributions. There's over $475 billion there. So certainly a large sum. I think you can rely on getting a CPP. But you can see, take it early, you get a penalty. Take it late, you get a bit of a bonus. And two quick facts here. This is from a research project done in combination, National Institute of Aging, Ryerson University, FP Canada. They all kind of combined to come out with this. And part of that research, they found that 95% of Canadians, they take it early, Kevin, 65 or earlier, and only a very small sliver, maybe 1%, actually wait until 70. There's reasons to take it early, reasons to take it late. You got to find what's a fit for you. Often we encourage folks probably to wait to take their CPP. But today's video, we're going to focus on a few reasons to take it early. And I'll throw this to you, Kevin. The first reason, and I think the biggest reason, you need the money.
Yeah, exactly. I mean, it's somewhat like the lottery scenario that you just mentioned, 95% taking it at 65 or earlier. Again, when you have an access to what some people would consider to be a free pot of money, even though you've paid into it, they want to access it as soon as they can. So you get a lot of that. But again, one of the main reasons that we see right off the hop is the need for income. Not everybody has a silver-plated or a gold-plated pension plan. Maybe people have not put as much money away as they need to for retirement. And all of a sudden they're looking at getting out of the game at the age of 60. And they say, well, I need a little bit more. So income need could be a huge factor for why you want to take it early. It may just be that, I'm willing to take that 36% haircut because I want the money now so that I can have it and live a little bit more the way I want to deal with it in retirement going forward. So that's a very key factor.
Absolutely. I always say if you need the money, if you're in dire straits, forget the mathematics. Just take it.
Yep.
It's a little easier of a decision in that case. Another reason to possibly take it early, shorten life expectancy, right?
Yes.
You can do all the break-even calculations, all the mathematics, but if you're unfortunately in a situation where your health is not the best and you have a shortened life expectancy, well, take CPP early. You don't have to worry about a pension when you're 96 if that's not a realistic possibility for you. So health absolutely becomes a factor here. And if you're not in the best health or there is a shortened life expectancy, certainly a reason to consider taking your CPP early. And again, the earliest you can take it would be 60. A little more of a nuanced one here, Kevin, more of a getting into the nitty gritty of how the calculation is done for CPP. But if you retired early or if you didn't contribute to CPP, for a number of years, we're saying not contribute after 55. That could be a barrier and that could be a reason to take it early, right?
Yeah, exactly. Basically, we know that the more you work, the longer you work, the more you contribute in there, the more you put in, you're going to get more at the end of the day. But if you haven't been contributing for a number of years, that extra amount of time isn't really going to get you anything more. So, for the extra 10, 50, 20 bucks it's going to be, what's the point of waiting till 65 to get that? I might as well take what I can at 60. That's going to make it a lot easier for me, especially if I'm already in retirement or I'm planning on retirement right now. Those are the things that really have to be looked at. So contributions and the amount of contributions you put in to a certain period of time have a vast effect on what the final number is going to be. And that is one thing that you really need to consider as to whether you want to wait till 65 or whether you want to take it early.
Yeah, and you can get estimates. Service Canada, you have to request it. They used to send them out, no longer the case. You'd have to contact Services Canada. You can request what they call a statement of contributions, and it'll tell you how much money you've put in over your working career, and it'll give you a few estimates. What happens if you take it at 60, at 65, so you can see some of the numbers. The idea here, though, is the CPP formula essentially looks at age of 18 until you start pulling the pension, or 65, that kind of working career. How much have you put into it every single year? And if you have a really big gap where you haven't been contributing, that can hurt your pension. You'll get a lower amount. And the idea here is the calculation at 60, the calculation at 65, well, they're a little different. And if you have a big gap on not contributing, waiting all the way to 65 may not actually benefit you, because all those missed years and all those years of no or low contribution can start to add up and actually draw your pension down. So that even though you're waiting, you might not get any extra. So something to certainly consider. Statement of contributions is a great way to get some of the data to help out with that decision. Another thing to consider, Kevin, is the tax situation, right? CPP is a taxable benefit.
Well, exactly. And being a taxable benefit, depends on how much you're earning now. If you've got a really great pension or you've put away a lot of money and you're pulling it out of your RSP or your RIF every year, and that's going to put you in a high tax bracket to begin with, the last thing you need is to add in a whole bunch more income on a monthly basis. Let's remember, if we're dealing with, if you're at the max at $1,200 as opposed to the average at $650, well, you're dealing with another $15,000 or $16,000 a year that can easily be taxed at the highest tax bracket. Why would I want all that if I can take it a little earlier, and that way I'm going to lower the amount of money I'm bringing in? So a low tax bracket, that's something that you can consider going forward with as a big factor for why you may want to take CPP at 60. It's a realistic view.
For all taxable benefits, ideally you want to try to minimize the tax burden. If you're in a low tax bracket, that might make sense to take it at that time. CPP falls into that category. And the last one here, I think most people, this is the first one that comes to mind, but we kind of saved this one for last and covered some of the other more kind of diligent criteria in advance. But the last one I'd say is you just want the money. It's your retirement. You want to enjoy those early years of retirement. You're not too worried about money at 85. You want money at 62. Well, you paid into the pension. It's your pension. You're certainly able to take it and enjoy it. And sometimes you got to make the emotional decision and not necessarily the financially prudent decision. So if you've got other assets, you're thinking, you know what, I'll probably be okay for retirement, but I really want to enjoy the early years. So I'm taking that little extra income. Is it the best financial decision? Maybe not, but I want to enjoy that active part of my retirement. So I'm just taking that little extra money, right? And I imagine you see a lot of that as well, Kevin. People having that kind of sentiment.
That's the purpose for that whole thing. And again, as we've always mentioned, it's part of what your financial plan is, right? If your financial plan is a lot more travel in the early part of the years, and you want to make sure that that excess cash is going to pay for these vacations or trips, or if you're buying certain things, or you're sending grandkids someplace. These are all factors that can work into what's going on. So when you take your CPP is going to be a huge one. But yeah, retirement, enjoying it early, especially if you want to get out at 60 as opposed to say 65, it's definitely worthwhile doing those things. So again, it all works into that sort of financial planning scenario as to what works best in your situation. But these are some of the key points that we wanted to look at for why you might want to take it at 60 as opposed to 65. Again, if you have questions on this, or if you want anything else in regards to CPP or that sort of government pension plan, please visit us at chatwithclintonandkevin.com. We're more than happy to answer those questions if I'm not tongue-tied, and we'll be able to get something going on from there. But Clint, any final words on why we want to do this?
I think we covered it well. We have other videos on CPP, so you can get a nice broad perspective across all the different information. But for today, we covered a few reasons to take it at 60. We'll be back again soon with another video, so everyone stay safe. Take care.